Hello and welcome to the 2021 Connecting the Next Billion Digital Symposium. My name is Paula Gilbert and I'm the editor of Connecting Africa, and I will be your host today. So this is the start of day 2 of this mini event. We had a very interesting first day on Tuesday, looking at Africa's last mile connectivity challenge and also the role of satellite in the continent's connectivity matrix. And today we have another great topic for you and some great speakers. Today we're looking at smartphone and data affordability as a key connectivity driver. Thank you to our 2021 sponsor, China Mobile International. Now, before we begin, I just want to go through a few housekeeping items. So I know you're going to have lots of questions today. So if you want to ask a question, you'll find the Q&A console underneath your slides on the screen. If you've got any questions, you can type them into that little Q&A box and submit them to our speakers. All of the questions will be saved. So if we don't get time to answer you, we may follow up via email. Also at the bottom of your audience console are lots of application widgets that you can use. So if you're having any technical difficulties, please click on the yellow help widget, and there you'll find answers to some of the common questions and common issues. Finally, also an on-demand version of the webcast will be available about 1 day after the event. So you can access that using the same link that we sent to you earlier today. All right, so let's start with our first topic for today. Now, affordability and mobile data and prices and smartphones themselves is really quite a contentious issue across the continent. A very recent report from cable.co.uk showed that sub-Saharan Africa still has the most expensive data prices in the world, with an average of about $6.44 across the region for 1 gigabyte of data. Interestingly, on the other end of the scale, North Africa is actually the cheapest region at about $1.53 per gigabyte. So there's a big divide even on the continent. Excuse me. Now, sub-Saharan Africa also has 6 out of the 10 most expensive countries in the world for 1 gig of data, and only 1 African country is amongst the top 10 cheapest in the world. However, we know we can't blanket the whole region into one group, and the range in pricing is really quite extreme. If we look at the most expensive country of Equatorial Guinea, 1 gig of data will cost you a whopping $49.67, while in Sudan, which is the 5th cheapest in the world, the same amount of data will cost you just 27 US cents. But unfortunately, it's not just data that is unaffordable. Smartphones themselves are often out of the price range of many Africans, which means that they're not tapping into the continent's 4G and 3G networks, and they're not getting a good digital experience on a feature phone. We have in recent years seen quite a few partnerships between African telcos and phone manufacturers, or also operating system and software developers, to bring affordable smartphones to the continent. And we've also seen the rise in popularity of smart feature phones, helping more Africans to get online and embrace the digital revolution. So the big question is, how do we bring down the price of smartphones and the data we need to power them, to ensure that Africans aren't spending a significant portion of their monthly income on connectivity? So to answer all of these tough questions and many more, I'll be joined by some industry insiders who will tell us their take on affordability in Africa and what can be done to bring the prices down. So I'll just go through the agenda quickly now before handing over to our keynote for the day. So first up, we have a presentation from Kelechi Okereke, who is the Director for Social and Regional Research at the GSMA. After that, we're going to head straight into a panel discussion where he'll be joined by Onika Makwakwa, who is the Head of Africa for the Alliance for Affordable Internet, Mitwa Nambi, who is the CEO of MTN Rwanda, Agnes Kinga, the Senior Manager for Terminals at Safaricom, and Kevin Mutuma, who is the Carrier Business Director for China Mobile International in Kenya. We'll also have an audience Q&A at the end, so if you do have any questions, just pop them into that Q&A console that I told you about. All right, so we're going to head straight into our first keynote for today. So that's Kelechi Okereke, who is the Director for Social and Regional Research at the GSMA. Kelechi, over to you. Kelechi, we can't hear you yet. Just make sure you've unmuted your mic. I'm not sure if everyone else can hear. Kenichi? All right, seeing as we seem to be having some trouble, Kenichi, maybe just try mute and unmute again. I'm not seeing him at the moment. Okay, so we'll maybe what we'll do is we'll go to one of the other panelists just to get a bit of an intro. Oh, wait, there's Kenichi.
Can you hear me now?
I can hear you now. Yeah, go ahead.
All right. Sorry, everyone, about that. Okay, so I'll just kick off once again. So as has been discussed, connectivity will be crucial to live our lives and more broadly to the way society functions in a post-pandemic world. As a result, around efforts to bring more people online. A quarter around the world live in Africa. And it's in this context that I will be talking about one of the most important requirements to bring more Africans online, and that is smartphone affordability. Now, before we start, allow me to introduce GSMA Intelligence for the benefit of those who may be hearing about us for the very first time. Some of the GSMA, which itself represents about 750 mobile operators and 400 companies in the 40,000 users, 1 million data points, which are updated daily and are published at gsmintelligence.com. So let's go quickly into our topic for today. We'll begin by looking at mobile internet adoption in Africa. So by the end of last year, just under a third of the population subscribed to mobile internet services. Now, this has increased significantly from less than a fifth in 2015, as you can see on the chart. However, the important story here is that 7 in 10 people across the region remain offline. It is worth mentioning that mobile internet adoption varies across the region, as Paula mentioned earlier. So from below 10%, places like Nigeria and South Africa. I will present today looks at Africa as a whole. Please, bear these variations and nuances at the back of your mind as we go forward. Has really put a spotlight on connectivity with work, education, shopping. It is moving online. This it just means that unconnected populations are missing out on these services online as soon as possible. So what is keeping offline in Africa? On this chart, we can see that in 2015, 39% of the population was not covered by a mobile broadband network. By this, we mean 3G, 4G, and above. Now, we call this the coverage gap. A little over 44% had access to mobile broadband networks, but did not subscribe to mobile internet service. We call this the usage gap. The coverage gap has narrowed quite significantly to a little over 10% of the population today. Now, 3G and 4G networks by mobile operators. Data shows that mobile operators in Africa, billion US dollars in capital expenditure between 2015 and 2020. In contrast, actually expanded by about 12 percentage points to 56% last year. In real terms, this means about 750 million people across Africa who have broadband networks but do not yet use. Insights from a survey we conducted at GSMA to understand the usage gap show that a lack of digital skills and affordability of handsets were the top two barriers holding people back services. By the way, you can see more of the that I just talked about in our 2020 edition of the Mobile Internet Report, which is free to download online. So with this background, let us now dig a little deeper into the smartphone trends in the region. In 2020, smartphone adoption in Africa, which is measured as smartphone connections as a percentage of total mobile connections, reached an important percent. However, it still lags, other regions by at least 20%. Next, there is Asia Pacific on 71%, China around 72%, and then it rises up to 82% in North America. We can also see that the gap between smartphone adoption and mobile broadband coverage is quite wide in Africa. It's pretty much the widest compared to other regions. And obviously, this highlights the scale of the challenge in the region. Talk about COVID-19. So the question is, what impact has it had on smartphone adoption? Basically, it's had a mixed impact. On one hand, increased demand for internet access during the pandemic, particularly for activities like home learning, has driven demand for smartphones in many markets. But on the other hand, we have seen, some device manufacturers and distributors point to disruptions in supply chains due to lockdown and travel restrictions, as having impacted their ability to serve certain markets. In all, we think net positive, as we expect demand to likely remain robust, in a post-pandemic world, as the supply chain issues are ironed out. However, the smartphone adoption figures we just, talked about. So we're going to break down access devices to mobile networks in Africa, and we can see that 4G enabled smartphones that can run on LTE speeds account for only 16%. This is just all smartphone connections in Africa. In other regions, we can see thirds or more of all smartphone connections are actually 4G capable. In places like North America, for example, it's pretty much as high as 98% of smartphones that run on 4G. Now, this is an important distinction to make, I would say, because if consumers are, to experience the full benefits of the internet, then they want LTE speeds to enable them access more advanced services and web browsing. So this brings us to the issue of affordability. As I mentioned previously, our research shows that it is one of the main barriers to smartphone adoption in Africa, particularly for pricier 4G handsets. Now, this chart here shows the cost of a smartphone as a percentage of monthly GDP per capita across low, medium, and medium income countries in various regions around the world. Data added to North Africa, so Sub-Saharan Africa now stays separate. And we can see that while smartphone affordability is obviously improving everywhere, including Sub-Saharan Africa, there's still a long way to go in these LMICs. So the latest data which we have for 2019 shows that on average, the cost of data-enabled devices is 60% of monthly GDP. However, it's 20% or less in every other region. And I mean, for comparison's sake, if you look at high-income countries, it's actually around 4%. Again, this begins to show the scale of the challenge, around smartphone affordability in Africa. Now, we're still waiting for 2020 data, but there is a chance that COVID-19 may actually have worsened the affordability challenge, given the extreme poverty. The extreme poverty in Africa rose by 8% during 2020 as a result of the pandemic, and the IMF thinks it could rise by another 2% this year. So with this in mind, we are beginning to see efforts by mobile ecosystem players to address the affordability challenge. There are two. One is to make cheaper data-enabled devices more widely available, and the other is to improve people's ability to pay for a device. We have device categories, or them have significant trade-offs for those very shortly. So on the left, we have what we want to call the lightweight operating system device model. And on the right, we have the financing model. We'll take them one after the other. Now, there are a number of lightweight mobile operating systems out there. Most of them target niche segments of the device ecosystem that are currently not fully served by the two mainstream platforms, which are Android and iOS. By far, the most popular of these lightweight operating system, it's now available in 51 devices, and it's used by well over 100 million people around the world. Now, while these low-cost devices running on lightweight OS, often come with cheap upfront costs. Some are priced at less than $30. Popular apps such as WhatsApp, Facebook, and YouTube pre-installed. There is a trade is that they miss out on a wide range of options that are available on Android and iOS operating systems. And also, we have seen, that in some cases, the small screen size and low resolution, which have been put in, to keep costs down, tend to diminish the overall user experience. On the other hand, you have the financing solutions. They help to improve the ability of many users to pay for full-spec devices that are often priced above $100. By allowing them to pay in installments. Now, these could be daily, weekly, or monthly. We have seen, see some examples in the next slide, as well as device OEMs and increasingly fintech companies use these models. However, the challenge, we're seeing for many users is that there are issues around protecting devices against theft, and of course, the lack of adequate credit scoring and insurance facilities, which can help mitigate the risks for financiers. There is also, looking at these two models, our conclusion basically is that there is no one-size-fits-all approach to improving smartphone affordability in Africa. So this means that both approaches obviously appeal to different segments of the market and address unique challenges for different users. So, for example, the lightweight OS approach would appeal to long-term 2G users, we think, who may view lower device specs as a reasonable trade-off for much lower cost of ownership. On the other hand, the financing model could appeal to younger, more aspirational users who are looking to get advanced features on their smartphones but are unable to pay high upfront costs for devices. So digging a little deeper, if I move on to the next slide now, it shows us, the various financing models in play in Africa. We have identified 5 of them. There may be more, but for the purpose of this presentation, we have identified 5 of them. 3 of them are led by MNOs. The difference between the 3 of them, being the requirement to pay a deposit and whether it is financed entirely by the operator or in partnership with a financial institution. Next, we have the PayG model, which aims to build on the success of mobile-enabled pay-as-you-go energy solutions across Africa. This model is often tied to PayG products such as home solar systems or digital inclusion initiatives, especially around education, health, or agriculture. And then finally, we have, the model. This is, beginning to gain traction across the region. They often partner with OEMs or distributors to pre-finance smartphone deals. There are some examples there: Netbank and Mara Phones in South Africa, in Nigeria. EasyBuy is also another fintech, and 3C Hub also in Nigeria. So this gives us, an overview of the financing models in play across Africa. Moving on quickly now, so who will benefit from increased connectivity? We think, there's broad stakeholder interest in increasing, access to connectivity and increasing smartphone adoption in Africa. I'll briefly talk about what this means for the 4 stakeholders we have identified here. First, governments and private businesses. For them, it's an opportunity to deliver services more efficiently by reaching more people through online channels. Now, this will become even more important as discussions around digital transformation and the 4th industrial revolutions are put on the front burner in the region. Then you have individuals. Of course, COVID-19 has shown how important it is that they're able to participate in the digital economy. And then content providers. Africa, has about 1.3 billion people, and now this is a huge addressable market for content providers, and we've seen the likes of Netflix, Showmax, and Iroko try to, reach these consumers, through content, video content, and other online services. So it's quite important to them that more people are able to access these services online. And then finally, we have mobile operators who are keen, obviously, to maximize their return on 4G investments. Some reports from operators have shown that more than half of available 4G capacity remains unused in Africa. Also, Airtel, Africa in its reporting has shown that 4G ARPU is twice that of 3G and 17 times that of 2G. We think this is a major incentive for operators to migrate, more customers from 2G, 3G onto 4G services. But obviously, they need the devices to be able to access those 4G networks. Finally, from me today, we will look at ways to increase smartphone adoption in Africa. It obviously requires a multi-dimensional approach. So I have identified, 8 initiatives there. Again, there could be more, but I guess, these will pretty much, be part of the discussions we'll be having later today. I'll just, mention them very briefly. There's a need to reduce customs duty and other luxury taxes on handsets. In some markets, this is as high as 50%. We've just talked about innovative financing solutions. In terms of government handset subsidies, as some of us may be aware, governments, some governments in the region collect universal service funds, USFs, from operators. Much of this is used to build out, networks in areas where, the economics for private investment may be more challenging, but there's talk about, using some of these funds to also subsidize handsets, for users in those areas, considering that mobile coverage is pretty much well above 80%, and the usage gap is becoming a bigger challenge, as it were. We also have restrictions on the production and distribution of 2G handsets. Now, this is quite controversial, I will say. But we've seen some markets, such as the Philippines, where this has been introduced, and it would be good to hear the thoughts of some people around this later on. And then there's a need to address distribution bottlenecks, particularly in rural areas. More than half of the population, in Africa live in rural areas, and with poor distribution, networks for devices, it's really difficult to reach many users. And then domestic handset production. Some countries, such as Uganda, have made this part of their strategy to improve access to smartphones. And then large-scale handset recycling and refurbishment. This is already happening in many developed countries, and we're also beginning to see it in developing countries. And finally, private sector handset subsidies and targeted donations. At the peak of the COVID crisis last year, we saw banks and some other private institutions donate handsets to low-income families, to help their children, to access online learning resources. So we have a poll, question out there. You will see it at some point during the panel discussion. It will be good to hear from you, the audience, to know what you think about these 8 initiatives and which of them you think will have the most impact on efforts to increase smartphone adoption in Africa. And so with that, I will hand back over to Paula. Thank you, Paula.
Okay, thanks so much. That was a really great overview of what the GSMA's research is showing at the moment. So I actually think we're going to do the poll right now. So Kenichi, maybe do you want to just go through those options one more time for everyone?
Yeah, sure, I will. Yeah, so the question is, which of the following factors do you think will have the most impact on efforts to increase smartphone adoption in Africa? First one there is reduce or eliminate customs duty and other luxury taxes on handsets. Like I said earlier, this could be as high as 50% of the total price of the device in some markets. Innovative financing solutions. Some of them are already in play right now, but perhaps we need more of it, you might think, in Africa. Government handset subsidies. So this is, governments, using either, part of the USFs or, funds from other areas to provide subsidies and rebates, to low-income families, to either buy smartphones or perhaps give up their 2G devices, for 4G-enabled devices. Restrictions on the product 2G handsets. We haven't quite seen this in Africa, but like I mentioned, we've seen this in some other regions. It's a bit controversial. It raises the question around, what then happens to those who can only afford 2G devices, but it's out there. Let's see what people say. Addressing distribution bottlenecks in rural areas, domestic handset production. Some countries, like I said, Uganda, has made this part of their strategy to increase smartphone adoption. But then the question is how effective and viable, will this be in the long term? And then large scale handsets recycling. So this is pretty much having a system in place to recycle used handsets, and perhaps either make them, if not free, to people who may not be able to buy their own devices, brand new. And then finally, private sector handset subsidies and targeted donations. So this is, private companies, specifically donating devices to lower income households, to give them the opportunity to get online.
Yeah. Okay, great. So if you haven't voted yet, we'll give you about another 30 seconds to vote. So please tell us what you think. I guess from my point of view, I would probably say a combination of innovative financing solution and government subsidies would be a good way to get more into people's hands. I'm interested by the restricting of 2G handsets, and I think that is controversial because, you are then taking away an option from really the poorest of the poor and forcing them to pay more for something that maybe they can't afford. What's your view on that, Kenichi?
Yeah, no, I totally agree with you. That at least for Africa, it's a kind of debate. Maybe I'll just put on my camera now. I hope my voice doesn't cut off. Can you still hear me?
Yeah, we can. Carry on. Okay.
All right. That's fine. Yeah. So it's quite controversial. It's kind of debate that we've seen also over the past 5 to 10 years regarding the digital switchover. Where you have consumers using analog TVs and other devices being in a situation where they now have to switch over to digital devices because the government would want to move analog spectrum, to mobile operators. We're seeing this kind of like debate going on now. I think it's controversial, probably not for Africa. For other more advanced countries, it perhaps makes sense for them to go that route. But in my opinion, not yet for Africa.
I agree, not yet. I think that's the thing. All right, I'm going to switch over now to the results. So let's see what people have voted. Okay, very interesting. So duties and taxes has come out on the top there. Let's see what's sort of next. Domestic handset production. I think that's actually a really good way to go as well, because obviously a lot of the having to import everything mostly from China, all of those expenses. COVID-19, we saw, delays, all of that. So if we're making things locally, that's also a good strategy. And then, just behind that, innovative financing solutions. Yeah. Very, very interesting. Well, thanks everyone for voting on that. And thanks very much to Kenichi for his presentation. If you have any questions for him, remember to put those into the console. And we are going to head straight into the panel discussion now. So I'm very happy to welcome the rest of our panel. So joining Kenichi now, we have Annika Makwakwa, who is the head of Africa at the Alliance for Affordable Internet, Mitwa Nambi, who is the CEO at MTN Rwanda, Agnes Kinga, the Senior Manager for Terminals at Safaricom in Kenya, and Kevin Matuma, who is the Carrier Business Director for China Mobile International, also in Kenya. So welcome, everyone. Annika, I'm going to come to you first. So obviously we've heard the GSMA's perspective, but the Alliance for Affordable Internet also does a lot of research on this, obviously. So in terms of affordability, what would you say from your perspective is kind of our current status in Africa when it comes to data prices and devices, and are we seeing them come down fast enough?
Good morning, and thank you so much for this opportunity. I'm going to get right to it. The reality is that affordability is still very much out of reach, both for data as well as for devices. At a time when we need these the most, I think COVID-19 actually exposed our inequalities and just how unaffordable access to the internet as well as mobile devices is for most people. And in fact, most of the data that we show tends to give averages in terms of, what percentage of household income. And Kineshi did a really great job of giving us those stats, which I won't go over. But what I want to also bring attention to is that those are averages. And what we find, and one of the things we have started to do, is to look at each country and look at the different income quantiles. And you'll find that a country that may seem as though is a bit affordable, say, I'll give South Africa as a good example, where on average, we may seem like we are closer to the 2% average monthly income. For those people who are lower earners in that lower 20% income quantile, they're spending more than 10% of average monthly income on connectivity. So as the economic crisis widens, what happens also is that more and more people are not able to afford access to both the data as well as the mobile devices that are quite critical for them to be able to stay connected.
Yeah, thanks so much. Agnes, I want to just come to you sort of from a telco perspective. What are the challenges that a network like Safaricom has in bringing down data prices? Because I think a lot more goes into it than people actually realize.
I think one of the biggest challenges is actually the affordability part, and I think that's been mentioned before, because if you have a population whereby 70% are actually living almost below the poverty line, so affordability becomes a very big issue. And some of the things that Safaricom has done is actually come up with affordable bundles that are actually to the lowest denomination, such that to bring accessibility to the customers. And also something that Safaricom has done very, very well is also bring down the price of devices, because that has also been one of the biggest barriers to adoption of data and internet in the country.
Okay, thanks. And Mitra, I'm interested in your perspective. Maybe tell us a bit about the Rwandan market as well. How are you trying to improve affordability there? And also, the network, what are the other things that come into it that come into the cost?
Yeah, thanks for that, Paul. And just to add on to what Agnes was saying. So I think the biggest challenge for MNOs is the decision point as to what comes first between scale and affordability. Right? Naturally, with scale and growth of volumes, we can bring prices down, but at the same time, scale will only come if prices are low. But some of the things that, speaking to Rwanda, I speak about the challenges, but for Rwanda, we're actually in a progressive position in the sense that to those numbers you shared before, the cost of 1 gig of data in Rwanda, I think, is sub 50 US cents to the dollar. And some of the things that have helped us come down to this level on data pricing is some of the policies that have been implemented from a regulatory standpoint, and Kelechi alluded to some of them, but I'll repeat. For example, on the Universal Access Fund front, where between MNOs and the regulatory bodies within the country, there's been a consistent use of those funds to go towards what it's intended for, which is the rollout of sites to ensure that areas that are not covered are unlocked, and therefore more people can come on, aiding the MNOs to see that scale and therefore drive affordability. At the same time, Kenneth just talked about taxes on telecom equipment to make sure that even if the MNOs have the intention of rolling out, you ease the burden of doing so. So as telecom equipment is coming in, taxes are lower, encouraging the MNOs or incentivizing the MNOs to roll out. Apart from that, when it comes to things like network, some of the biggest costs that we have would essentially be, for example, where we've outsourced our tower management, the cost around tower companies. So in Rwanda, for instance, we've seen the introduction of more tower companies, to increase competition and affordability in that space to the MNO. And therefore, if my tower cost is a little bit lower, it enables me to, relieve some costs on my side that I can enable to push down that price down to consumers. On the flip side, an interesting point that Kelechi also raised was around technology evolution, right? And I think one of the things that could also ease the burden on MNOs and therefore allowing them to pass on that price benefit to consumers is around access to spectrum and technologies. And Kelechi hit the nail right on the head. It's inevitable as a consumer moving into a 4G environment. The ARPU is 17 times higher than 2G, 2 times higher on 3G. And naturally, as MNOs have access to that spectrum, unlocking 4G opportunity, increasing ARPU, naturally, by scale, that affordability will come. So I think it's a really fine balance. Maybe the biggest challenge I would say for MNOs is finding out that fine balance between what comes first between scale and affordability. And it is aided really, at least from our experience in Rwanda, by a lot of the policies that are in the regulatory environment.
Okay, thanks so much. Yeah, that stat shocked me, but 17 times, that's a big jump. Kevin, so kind of what's your strategy, a company like CMI, in terms of making devices and connectivity more affordable to a market like Africa?
Yeah, good question, Paula. Obviously, from a China Mobile perspective, we come into it from a position of experience, having deployed, having high accessibility in China in terms of smartphone penetration, for example, and we want to leverage our experience in those markets to actually support Africa in growing the ecosystem. So from two models where we have one of our subsidiaries in China Mobile that is purely on device manufacturing and also, of course, device channel selling. And we're working with telcos in Africa to support them with reaching this where we can aggregate some of the volumes and be able to manufacture entry-level, 4G entry-level, 3G entry-level device at a way better price unit that would be costing it from single unit manufacturers. So some of the things we are working on in some of the markets, West Africa, Southern Africa, and Southern Africa, we believe will get this movement and this change within the coming months and years, where as numbers, the difference between the scale and affordability is able to be realized faster and MNO.
Okay, thanks. Yeah, very interesting. Kelechi, I'm going to come back to you. You touched on it a bit in your presentation, but obviously the reality is that the pricing of data and just broadband in general, the rates vary so much across Africa. So how do we get to a more affordable benchmark for most countries?
I mean, there's an important, point that we haven't discussed, and that's mainly because, it's pretty much out of scope for us, and that's the wider macroeconomic environment. And the mobile industry obviously, cannot do much about, what's going on in the wider economy. They can only influence, things that are within their control, okay, and macroeconomic issues, income levels, inflation, and things like that, are way out of their control. So from that perspective, it's really, difficult to have a one-size-fits-all benchmark for everyone. So I think, this, obviously speaks to the point Monica mentioned earlier, which is, we have to look at each country individually, assess the situation in each of those countries, see the segments of the population that are most excluded and unable to afford these services, both data and handsets, and then come up with unique solutions, okay, that can pretty much, help those segments of the population in those markets, So yeah, it's obviously going to vary from market to market. There is a big part, the macroeconomics play in this, but I think, it's about taking each country on an individual basis, identifying those most at need in the various countries, and of course coming up with solutions that are tailored towards addressing those specific needs.
Yeah, that's a really good point. I mean, the macro thing is quite difficult, and you've got to look at it on a country-by-country basis for sure. So, Agnes, when we're talking about sort of like interesting financing options for smartphones, I know Safaricom has been working with some of the phone manufacturers to try bring, better priced smartphones into the country. So how's that going so far in Kenya?
Okay, so that has been very successful, because one thing that Safaricom has actually gone out and done is look for ODMs who can actually manufacture low-cost smartphones are affordable in the country. So this means maybe moving away from the mainstream traditional vendors and actually seeking out ODMs who are keen to enter into the sub-Saharan market and work together and come up with affordable devices. Another thing that Safaricom has done is also making sure that the quality assurance of these devices and that they are up to standard, as well as innovative pay-per-use models. I know in the presentation by Kenechi, I know he talked about the device financing model that was launched by Safaricom. So that's one of the innovative ways in which we're driving accessibility and affordability. And given that affordability is the biggest barrier, especially in most sub-Saharan markets, we actually worked out what is the lowest denomination or the lowest affordable price point that will actually drive accessibility, and crafted a whole proposition around it. And with that, we've been able to open up and drive accessibility in the market. Of course, it's a very intensive process, because it requires you to build a loan platform if you don't have one. The MNO also has to invest in something like a credit scoring tool or a tool to help you sift out the customers and see who you can actually afford this kind of financing to. And on top of that, you also need to have a way of what leverage can you employ as an MNO in case of default. And finally, also as an MNO, you have to look at how much risk and how much loan can you afford as a business, and that also impacts the scalability. But however, from since we launched like 8 months ago, this has been working out so well, and we have been able to increase the access especially for our most vulnerable members of the community. And that has worked very well so far for us. And the next thing is now just to scale it up in the coming months.
Okay, that's great. It's so great to hear that it's going so well and it's working. But yeah, a lot goes into it, I'm sure. Mitwa, I'm interested also from the Rwandan perspective. I know you also had this program called Connect Rwanda, which was smartphone donations that you were running in. It was in 2020, but did you just run it for a short while, or have you kept that going? And sort of how did that go? Also, feature phone trade-ins to try to get people onto smartphones. Yeah, some interesting things.
Yeah, no, I mean, as you're reading out the results for the poll, Paula, if I had responded to it, probably my response would have been among the most unpopular ones, because I saw, private sector donations at 3% and public sector donations or government donations coming in at 11%. But if I had, responded to that, I would definitely have gone a combination of both, just given the experience that we had out here in Rwanda on the Connect Rwanda initiative. And that initiative was really born out of, to Agnes's point, having tried and experimented different things. So we also did the Kai OS device, and it had some traction. It had some good points. It had a level of success. We've also tried device financing, which is pretty much picking up momentum now. But through all of these initiatives, we still found there was a segment of the population that still remained unserved. And for us, it was a reflection of, if we're really going to give this smartphone penetration a stab, private and public sector need to come together to find a solution to this, hence the birth of the Connect Rwanda initiative. And at the time when we were reflecting on it, we were thinking about the 1.6 odd million smartphone users that we had on the MTN network. And the initial reflection was that, look, can you imagine a Rwanda where these 1.6 million smartphone users today, who can clearly afford because they have the handset, if they just bought one handset for somebody else, that would automatically double the smartphone penetration in the country. And that was the very simplistic thought at the beginning. With that idea, we approached the Ministry of ICT and Innovation here in Rwanda, because we understood this is not about MTN's commercial gain. It's really about us making a dent within the country for the future benefits of all players, like Connection showed in his slides. So, with the ministry on board, we We then kicked this off December of 2020, and was really mimicked around the Ice Bucket Challenge. If you recall the Ice Bucket Challenge that tried to raise awareness around ALS back in 2014 and 15. And back then, I don't know if you guys know, but that challenge in itself, over a period of 2 months, raised $220 million, So that was the thinking behind Connect Rwanda. So we challenged individuals, corporations, public institutions, the government. And I remember the Ministry of ICT even saying, why not even invite the president of Rwanda, His Excellency Paul Kagame. And he's the one who kicked off the challenge December 20th. I remember when we kicked off the challenge, it was the longest 24 hours of my life, waiting for that tweet from His Excellency. And, lo and behold, he came on and says, look, I'm getting on board with this Connect Rwanda challenge, and I challenge every single person who can afford, please throw your hat at the ring and donate 1, 2, 3, 1,000 devices so we can get these smartphones into the hands of the people who don't have them. Now, this was before COVID hit. We ran it for about 2 months, and in that space of 2 months, I promise you, we raised $1.25 million. And this is money that we didn't have before. And, COVID does slow down the momentum slightly, but it did show, however, the potential of these public and private combination type initiatives that allow us to unlock that segment of the population that don't respond to the KaiOS devices of this world, that don't respond to device financing of this world, et cetera, et cetera. And, people have asked me, so you raised this 1.25 million, what has happened since then? And of the devices that we've distributed so far, they're roughly about 10,000. We see 95% of those devices still very much active on the network, and even beyond the free data that we gave them, now also buying for themselves. So it's not a case of people not wanting the device or not knowing what to do with it because they eventually use it. It's really breaking that initial barrier, which unfortunately for some segments of the population, no matter how low the price comes, it's still not enough. So I do think there's potential to build upon the learnings and the experience we had in Rwanda with Connect Rwanda to explore the potential of private and public donations to the underprivileged, given that they remain underserved.
Yeah, that's amazing. It's a very different way of looking at it, but you can tell it really worked. I think it's exactly what you said. It's that initial barrier. If people can't afford the device, then they're never going to be able to even think about affording the data, right? So you got to try get them on that first. Kanechi, I want to come back to you. So we've a couple of people in the Q&A are asking this as well. I think maybe just a breakdown of what are the main factors that are actually keeping smartphone prices high?
Okay. Well, I think the first one will be, as we know, Africa imports most of the smartphones that are sold locally. And so you have to think about the customs duty that's paid on these devices when they are imported. So that adds to the cost, as it were. Like I mentioned, before, countries is as high as 50% of the device cost. So if you have a smartphone that's selling for $200, you can see that is paid on that device. So that's the first one. The second one I will say is the distribution network. Okay. You still have, smartphones being sold through wholesalers. Well, it goes through several, steps, as it were, several wholesalers before it gets to the retailer, who then sells it to the end user. And as it goes through this very complicated distribution network, each step of the way, there is something that's put on top. There is, a margin that's put on top, by every single player in this really long and convoluted distribution network. And so, addressing those bottlenecks around distribution could help, to reduce the price. A situation yet where most people buy devices online or through online channels in Africa. It's still, through the physical stores. Okay, so that might be there for a while. But as time goes on, as we, begin to see more online, channels become more popular, the likes of Jumia, for example, that might help to reduce some of the additional costs, that end up, going into the price of handsets for the end user. main points I will, really say, are pretty much keeping handset prices, out of the reach of many people in the region.
Okay, thanks so much. Kevin, I'm going to come back to you. I know that CMI has done some work with telcos trying to bring, more entry-level phones and also cheaper CPEs into Africa. So can you tell me a bit about that, and what other initiatives are you guys running that you think are really working?
Yeah, that's a good question. Just to add on to what Kenichi was saying about cost smartphones as well. We've seen, for example, in the last year of pandemic, several supply chains have collapsed because of the pandemic in several countries, hitting the manufacturing, and that has a cost of devices. In a similar, in one of the examples, one of the markets we're working in, the price went up almost 30% because of chipsets, the raw materials we actually manufacture devices. We also are seeing in Africa, one is the cost of foreign currency devaluation, which exposes the telco even further in terms of having because at the end of the day, the telco just wants to sell the services on top of the device, not really to make a margin out of it. So they are starting out with very low margins, and if that changes because of the forex, for example, that has happened in the last year, it went up almost 12%. Then that exposure is on the telco. So it further marginalizes people who cannot access this kind of devices. But one of the things China, as you asked, China Mobile is doing is beyond aggregating the volumes across the world and manufacturing millions of devices in our factories. We are also trying to work on insights around each market. So we will actually sit down with the telcos and try and get what devices work and why we need to sensitize and actually help them understand the habits of devices. And that, therefore, we can customize a product that suits their needs 100%. In some cases, we've seen telcos saying, I would like to customize the SIM cards are locked so that I can charge that as an amortized value over the 12 months. And we are able to do like this volume. So beyond that, we also in many countries where we supply devices to lower the custom duties and enable the supply chains better to reduce, as Kenichi was saying, there are many players in the value chain, and that actually increases the cost of the device at the point of land. So we are working to cut up and actually direct, like working with China Mobile device company, gives you a direct kind of connection between the manufacturer and the telco. So some of those initiatives will help further lower the smartphone prices. I think I want to add on one point that beyond actually getting the smartphones, that is what you use the smartphones. And that things that causes the ability challenge even more. We've seen that through the COVID pandemic, smartphone for, and actually many people have seen that it's to and create some incentives that help more marginalized communities and home afford smartphone devices.
Okay, thanks, Kevin. Annika, I'm going to come to you with the same question about the challenges. I know you wanted to add to that.
Yes, certainly. I think, we touched a bit on this issue. I think the biggest item that came up in the poll was the duty tax. And what I want to bring our attention to is that this issue of taxation in the ICT sector overall is something that we need to address if we want to be able to achieve our affordability goals. Because this excessive taxation in the sector is not just only when it comes to duty on foreign imports of devices, but we are also seeing the tendency to overtax even data that then goes directly to consumer costs, right? As well as I believe it's one of the speakers spoke about taxation on ICT infrastructure itself. So I think what we have to look at is a public policy environment that will actually enable sustainable affordability within the sector, and that requires smart taxation, not looking at the sector as a growing industry or as an industry that's most beneficial in terms of revenue right now and therefore overtaxing it, because that could actually potentially forestall its growth, but rather looking at it as how do we enable this industry by reducing the taxes to get more people interacting, that therefore eventually brings in more revenue through digital economy activity of people in the sector. So there's quite a number of examples I can give, but I'll just give you a couple. I know, for example, now that Uganda is having conversations about a new 12%, potentially 12% tax on data specifically. If you can think about the unaffordability that exists in that market right now and what an additional 12% to the consumer could actually do in terms of even their penetration, it will definitely slow down adoption and usage. And then when you look at also historically what the sector has contributed, we did a study in Nigeria looking at how much the industry had contributed in taxes and fines in 2016. And that amount came to $850 million in 1 year, with about 26 unique taxes in the sector, from VAT to communication service tax to duty tax and SIM card registration tax and all of that. So I think at some point we have to have a conversation about smart taxation to enable the kind of smart growth that we want, so that we are not taxing the sector out of and really jeopardizing its potential growth.
Yeah, thanks so much. I think it's a really, really good point. I want to talk a bit about these smart feature phones now. So Mitwa, I'm going to come to you first. You were kind of saying, on the one hand, people don't really like using them, but I guess on the other hand, it is helping get people sort of onto this like 3G, 4G journey. So what's that been like in Rwanda, and maybe what MTN's seen across the group? How's that going, and what's kind of the feeling from people?
Yeah, I think there's definitely a place for the very entry-level smart, I don't want to call it smartphone, smart feature phone, especially when you're talking, very vulnerable segments of the population where affordability is 10 times higher than other segments. But the reality also is, as you see graduation in terms of usage, these types of devices, and I did see a question from somebody in the chat talking about the quality or the lifespan of these types of devices. They do tend to have limitations at some point. So I think the key while driving smartphone adoption would still to be to have an eye on the capability of devices. Not that we are solving one problem now and creating another one 5-10 years down the line. So the key really, I think, would be to unlock the price of a good enough smartphone that would allow a lot more feature usage than the typical 2G feature phone. And I know I'm asking an almost unanswerable question, because at the end of the day, the cost of these devices are fueled by the cost of production. But at the same time, again, we circle back to the solutions around, device financing, device trade-ins, et cetera, but just maybe in conclusion, I think, 2G, smart feature phone devices, while they have their place in unlocking the smartphone penetration dilemma, I would say, if there were any efforts to be placed, the emphasis should be around how do we bring down the price of those that are a little bit more higher than that smartphone feature, that smart feature phone, knowing that they have limitations, which in the long run would still be sitting around this table now, maybe with a different type of discussion around how do we convert, the people that we had onboarded on smart feature phone onto now entry smart. So while there's a place for the long run, if we want to do this for Africa and do it right the first time, the emphasis should rather be on how do we bring down the price on the entry smart that is long-term viable.
Yeah, I think that's a good point. Agnes, what's your view on that and smart feature phones in Kenya?
I agree with Mita, because even if you upgrade to the smart feature phone, in a few years you still have the work of upgrading them to a real smartphone. So it's actually like a two-step process, which I think can be shortened into a one-step process. If you can get a very affordable entry-level smartphone, and that can move people from 2G directly into the world of 4G and the world of smartphone. However, I also agree that we have some vulnerable members of the society, at the bottom of the pyramid, who probably even with all the resources that they can raise, there's still a room for a smart feature phone. However, like for this market, it's a very niche market, niche opportunities. So it's not something that will be mainstream, but probably just to address some certain niche customer needs. However, I agree, for us to drive connectivity for sub-Saharan Africa, we need to move people directly from 2G all the way up to a real smartphone, and not do the stop at the smart feature phone level, because also there is a risk that they can get stuck there and you lose an opportunity to actually do a direct upgrade. However, I think it's clear, as I think Konika said, we still have a key niche that we need to address with that particular device.
Yeah.
So as an MNO, your work is to assess how big the niche customer, the opportunity, how big the opportunity is, and whether it makes commercial sense to actually have that as part of your offering to the customers.
Yeah. Yeah. Okay. Yeah, for sure. Monica, I also just want to come to you about that. So obviously we know the price of smartphones has come down a lot, but are we reaching a tipping point? What is that level? $20? And we're sort of seeing some $20 phones. Is that still too expensive? What's your view? Sorry, you're still on mute, Annika.
Oh, yes. I think, based on the research that we've done, what we are learning is that the affordability for smartphones in particular is still not, it's still out of reach for many people. And I think it's a bit difficult given the economic crisis that we face because of COVID-19 in particular, because we are seeing a widening gap in incomes as well, which means that the poor are even poorer at this point, but definitely still very much out of reach. You know, one of the things that I think we haven't really also explored, in addition to the financing issues and the duty issues, is really this issue around even local assembly of the devices. How do we have those kinds of partnerships that, you know, we can still import but there's some level of local assembly of these devices, and as you know, and also local content from software uploading done locally, as opposed to phones arriving fully, you know, with everything in them. Because what that does also is that it begins to help develop new industries within the different countries that we are importing into, and also reskill and to a workforce that, you know, needs to really move towards this, you know, 4IR phase that we are all moving towards. So what opportunities exist in the production of the smartphones and potential of local assembly that could actually benefit affordability, as well as address some of the skills and jobs crisis that we have in the region.
Okay, thanks. Yeah, some very good points. I want to move to something that's a bit different, talk about 5G a bit, because I think it's kind of at the other end of the spectrum, right? So, Agnes, I'm coming back to you because Safaricom obviously launched 5G just a short while ago. Obviously, this is very exciting, and we're excited about the technology. But then on the flip side, I mean, the main thing I think that's going to keep people from not using 5G, for mobile at least, is the affordability of the handsets. They're so expensive, right? So how is Safaricom going to try and make those more affordable for people so they can use the 5G network?
So how Safaricom is approaching this is through partnerships. So we have some key vendor partners that we've been working with, and if you saw our launch, we actually had the vendor partners present. So we are talking about the big vendors like Samsung, Huawei, and Transsion. So because the only way we can make 5G accessible is by onboarding the vendors and the OEMs. So to bring them to the table, have the conversation, and also work out ways of having 5G into mainstream devices which are more accessible by the customers. So I'd say the only way to make 5G accessible is by having those kind of partnership arrangements with the OEMs and the vendor partners as part of your stakeholders as you roll out. Because that's the only way we'll ever get to people to adopt 5G. So we've already started, we already have the partnerships at play, and we're already working on how to scale it and make it accessible, at least, and start the journey together.
Yeah, okay, that makes sense. Kevin, I wanted to ask you a bit about your views on 5G as well, and what do you see as some of the challenges in Africa for the rollout of 5G?
Yeah, good question. I think maybe we set a backdrop first of our own experience to the 5G in, of course, developed markets like China. Today we have about 84 million users of 5G. That's within China. And with this, we've been able to also manufacture devices devices that are, let's say, sub $150 for 5G entry level. And we hope that as the scale increases, we will be able to lower these costs even further. The other challenges, of course, as you mentioned, with 5G here in Africa is because are still yet to recover their cost. So my 3 years meter would know would be I'm not yet ready to invest on a 5G network. It's already too expensive running my 5G network at the same time. So we're working on initiatives in more developed markets where we are trying to phase out actually the network and knocks the bottom line actually improve, and then that's in on 5G. But I'm very delighted to see the growth in 5G in Africa. I think at least 18 countries or 18 in markets have already started trial 5G. Out of which at least in some sort of commercial usage, and we'll be working more closely with some people to help with the even further, leveraging our own experience. Remember, we are running almost 400,000 stations or 5G already as of this year. So we want to actually bring this experience into Africa, working with the telcos, helping them mitigate the risk that are there. Maybe to touch on the point about the device finance, this could be an interesting topic. Because, another way it can be looked at and called some exclusion. And that's what we are trying to avoid. Remembering that these are vulnerable members of society, so the device financing schemes or the airtime advancing schemes, while they are good in some of those members and they can also cause some sort of explosion in the care needs to be taken well, depending on how they are deployed and which market. So that would be my take on that. But we're very keen on working with partners on the 5G and developing that in Africa.
Okay, thanks so much. I'm going to take some questions from the audience now. We've got a lot of questions coming in, so thanks very much for that. So the first one, I think, Kenichi, I'm going to throw this one to you. Quite interesting talking about electricity, which is obviously an issue. So considering the low electricity penetration in sub-Saharan Africa, why aren't we seeing more solar-enabled smartphones?